And on that one, I want to bring in now Rebecca Walser, president of Walser Wealth Management. Rebecca, thanks so much for joining us here on the floor of the exchange.
Yes, thank you for having me.
So
happy Friday and the end of the month, too.
Exactly. What do you make of the markets and the early moments of trading on the end of the month, at the end of the quarter even?
So I think that the market's definitely thankful right now. The banking crisis has been stymied. I don't know that we know that it's over, but it's been stymied. And so the markets, the markets are day by day right now, week by week, as everything has been very volatile. So they think that the banking crisis has been stymied. And obviously the PCE numbers gives Powell the more leverage that he needs if he does want to shift policy and not be so hawkish. Even though we saw him be hawkish in this last meeting of March 22, the FOMC meeting, we know that he was hawkish because he was almost afraid to say, hey, let me pause. There is actually a crisis. So he had to send a message still of strength, but now I think this gives him additional artillery to say, hey, we could potentially look. But if you look at the, market watch, we're still over 52% probability of another 25 basis points in May. So we really have to see a lot more data indicating that we are going in a different direction for the Fed to pause. I think that the analysis overall does show that if the Fed doesn't change course and actually cut rates, and my analysis and our analysis is showing really 4 times, which is not going to happen anytime soon, we could really be looking at a sovereign debt crisis globally. So the market is very optimistic right now because there's been so much bad news that anything positive is going to give us a whipsaw, especially on a Friday, especially the end of the month. We all have that positive psychological, let's have a great end of the month, a great end of the week, great closeout for the first quarter. I mean, it's everything coming together, but overall, we still have a lot more problems, Chloe.
Yeah, Rebecca, and to your point here, those PCE numbers coming a little bit later than expected. Yeah. I think some people were even expecting, Goldman Sachs in particular, possibly a pause last round of rate hikes. Yeah. Based on what we saw in terms of trouble with Silicon Valley Bank, in terms of those bonds that it purchased at a lower interest rate hike, what is the likelihood that we are going to see that other rate hike coming forward on the back of this data? Also, unemployment filings that we saw this week.
I mean, I think Powell is going to be looking for every piece of data that he can use to say, hey, this does support a pause. But at the same time, I just think we have too much runway between now and May to actually have no more problems. If we continue to have problems, in other words, if the banking crisis, if liquidity, it's really not a banking crisis, it's a liquidity crisis. It's exactly what you said. You had too much money sitting at basically, and too many bond purchases at really low interest rates that when the rates were, rising, obviously people took their deposits and moved it into higher interest. And so the banks lost their liquidity. And there's no additional stimulus and liquidity coming from quantitative easing because that's ended and the cost of capital is too high. So all of these things together, we can see that the banking lending requirements have really tightened and really strict, which is always what happens anytime we go into a recessionary period. The banks start to tighten up liquidity and lending, and that's not what we want to see, and that could exacerbate this between now and May. And if that happens, he's going to have a lot more data to actually pause or even pivot to a cut, which would be shocking, I think, for the market.
Rebecca, I have to ask you about a story that we've been following, all week. The indictment of former President Donald Trump, a historic indictment of any current or former president at this point. How do you expect this could affect the markets moving forward? What should investors be looking out for? So
funny, because normally I think that would have been a market rocker, right? But I think that the market is so used to drama with Donald Trump and even New York City, the district here. But I just don't think it is unprecedented. As a lawyer, it's troubling for these kinds of things to be happening, whether they're politically motivated or not. But I think the market in and of itself has really gotten sort of used to the Trump drama over these years. And I don't think that, now if we have an actual, arrest, public arrest, that might start to make, roll the markets. And he has a lot of followers, and who knows how they'll react. So it's very scary.
Rebecca, unfortunately, we are out of time here, but thank you so much for your time for insight today. That's Rebecca Walser, president of Walser Wealth Management. Baker, toss it back to you.